So what is this gamma curve that we're seeing in thinkorswim? So welcome back, options traders. And I've had a number of people asking about some of the submenus in the Analyze tab for those of you who use thinkorswim. And one that comes up a lot is this gamma curve. So what exactly are we looking at here, and how do you use it? Well, as always, before we get started, please be sure to click like and subscribe. It's definitely very much appreciated as it helps to promote the channel. So recall that gamma is a sensitivity measure. It's actually one of our Greeks, which are some of the risk measures that are really an output from a pricing model. That's where these numbers come from. And what gamma does is it measures the change in your options delta for a $1 change in the underlying's price. So it's really measuring the change of the delta as the stock price changes. And that's why sometimes you'll hear it called the delta of the delta. So recall that delta is showing by how much your options price is going to change for a $1 move in the stock. Well, gamma is doing a similar thing. It's just showing you by how much your delta is going to change. So some other things you're going to need to understand, some other terms. Positive gamma, understand that long options that you buy, have positive gamma. And that means that your risk curve, your current curve, will slope upward. And what that's telling you is that delta increases as the stock price increases. If it's confusing, we'll look at some examples in just a moment. And it also means that delta decreases as the stock price decreases. So, for example, let's take a look at a long $100 call. And this blue dotted line is what your current curve will look like. Now, it's called the current curve because this might be our risk graph with, let's say, 30 days till expiration. It's not right at expiration. Most of the risk graphs that we look at are always at expiration. But the current curve shows us how our either profits or losses or gamma or whatever it is that we're looking at are going to change today. And so that's why you'll sometimes hear this called today's curve or the current curve. Now notice that if you imagine that this was a piece of wire, that to get this kind of a bend, this U shape, you would have to push from the top. And so that's one way to visualize positive gamma. And what that's telling you is, let's say that the stock price is down here, this region that's fairly flat. Your platform might tell you that you have a 20 delta. But if the stock gets up into this range, a little bit steeper through here, might show that you have a 35 delta. Up here near the strike price, might have a 50 delta. Up here, as the option goes deeper in the money, it might be an 85 delta. And finally, if that option goes super deep in the money, at least prior to expiration, you will see a delta of 1. So what gamma is showing is by how much, by the way I've drawn this, that these red lines are changing. So for example, let's say that the stock is somewhere around here and that we have a delta of 50 right now. But what we're trying to figure out with gamma is that if the stock price moves $1 right now, what would my new delta be? And let's just say that hypothetically it will increase to 55. So we've gone from 50 to 55 deltas on a $1 move. That's a change of 5. And that means that our gamma in this region is 0.05. So to find this new delta, you would take the old delta of 0.5, add gamma to it, and that's going to give you 0.55. So again, as a recap, let's say that we were looking at this position when it had a delta of 50, and our broker's platform says you have a gamma of 0.05. You would know that if the stock price makes a $1 move right now, your new delta is going to be 55. And the way that you know that is because of gamma. Now we'll get the reverse picture if we were to look at put options, or if we were looking at short options, we would get different risk graphs. But the idea is always the same. What is the change in our deltas for a $1 move in the stock price? And whatever that change is going to be shown as gamma. All right, so that's the basic recap of what gamma is. Why would we use it? Well, it's a fairly simple idea here on a single position, in this case, just a long call option. But what happens when you get into more complex positions, it's not so easy to see. So for instance, let's take a look at a vertical spread. It's not really even all that complex, but it does have two options. And so in this picture right here, we have a maximum loss of $1.80 and therefore a max gain of $3.20. Now remember that this black line is at expiration, not today. But if we were to look at our broker's platform, it might show us a current curve like this. And so now you can see that we have this upward sloping portion down here, like we just saw, and that's because we're near the long option. But notice that if the stock price moves up this way towards the short position, that this curve starts to bend downwards. It's as if we're pushing from below. It's actually got kind of a downward, almost a frown shape to it. And that tells us that our gamma is changing. Over on this side of the graph, we have negative theta and positive gamma. But after a certain point, we're going to flip. We're going to have negative gamma and positive theta. But if that sounds complicated, it gets worse, because this blue curve only applies for today. Tomorrow, that blue curve is going to move to maybe this red one, and the next day to here, the next day, and every single day, it just keeps moving towards the black. So remember that the black is right on the expiration bell. So now we can see that not only the magnitude of the gamma, the curvature is changing, but the position of where it occurs is changing, and it's going to flip from positive to negative at different points. So one question we might have is, okay, I know what my gamma is today, but what's it going to be tomorrow? And at what stock price is it going to change from maybe positive to negative? And how much will that change be? There's a lot of questions that we might have about gamma because we're trying to figure out what our deltas are going to be, and that's ultimately the biggest risk measure. Now, some people have argued that gamma might be the most dangerous Greek, the most important one, and you could certainly make an argument for that because what you're saying is that as gamma increases, the rate of change of those deltas is increasing. And so that could really send you off a cliff, and if it's in the wrong direction, that can be an enormous risk. So once again, depending on the position that we have, we're wondering, how is my gamma going to change, and where, and by how much? Well, those are complicated questions unless you have a platform like thinkorswim that will show these to you, and that's where the gamma curve comes in. So how is it used? Well, let's jump over to the thinkorswim platform and take a look. All right, so now we're into the thinkorswim platform, and I just happen to have NVIDIA up here, but we are on the Analyze tab, and the way that I got this trade down here, it's a vertical spread. I'm going to come over here to the Add Simulated Trades, left mouse click, and it allows us to pick any number of strategies that you could use from the regular trade tab. So from this drop-down menu, I've just chosen vertical, and I just picked the 145-150, which is down here. I can, of course, change the number of contracts, the expiration dates, the price that I'm willing to pay, lots of things I can change, and whatever numbers I put in here is what we're going to analyze. And so once we get the trade set up the way that we want it, we come up here to this second tab that says Risk Profile. So this is what we just saw in the presentation. This blue curve is the expiration graph, but this pinkish curve right here is the current curve. This will give us our answers only for today. So because right now we're in a risk graph, we're looking at profits or losses. So for example, I might say, what will my profit be if the stock is 160 today? I'm going to line up at 160, and right there at the top, 398.04. I can also get that same answer by looking down here to the lower left, and right there in that same pinkish color code, 398.04. So if I just kind of brush along here, watch those little white numbers, it's showing me what my profits or losses will be at these various stock prices, but that's only for today. But once again, we might have other risk questions about gamma. Where will these deltas change? Where will they flip from positive to negative? And whatever answer we get is only good for today. It's not going to apply for tomorrow or for next week. So how could we get answers to all of these complicated questions? This is where your gamma curve comes in. And the way that you get it is to come up here to this drop-down menu that says Metric. Click there. Here's all of our Greeks. And right there is gamma. Choose that. And there is your gamma curve. So the way that we read this blue line is 0. Now keep in mind that this is gamma on this vertical axis. It is not profits and losses. So this is showing 0 gamma. And if the purple line is above the blue, we are in positive territory. See, look over here to the left. These are all positive numbers above 0. So this is the area of positive gamma. And then somewhere around here, we flip over to where we are below the blue line. We're into negative gamma territory. So what are some ways we could use this? Well, there's lots of different ways, but let me show you a few. One question I might have is, where is my maximum positive gamma for today? Well, I'm going to look wherever this purple line is above 0 and where it's the highest. So notice that it shows about 0.83 is the gamma. If I kind of sweep a little to the left, still at about 0.83, still about 0.83, that tells me I don't need to be super precise. It's several stock prices right in this range that will give me the highest gamma at 0.83, at least for today. And if we look straight down below, 110.86, so probably somewhere around 110 to 111 will give us our highest gamma. Now, where will it turn from positive to negative? Well, that's where this pink line crosses the blue, and that looks like it lines up at about 140. So if the stock price rises above 140 today, we're going to flip into negative gamma. What's the smallest, or some people would think the biggest negative in terms of absolute numbers that we could have? So I'm going to find where the pink line here is the lowest. So there's minus 0.6, 0.61, and try and find the kind of the largest number right there, minus 0.61. And that's at a stock price of about 174.5, 175, is where we will have our, technically it's the smallest, but a lot of people are going to say it's where it is the most sensitive, but it's on the negative side. Is a stock price somewhere around 175? Well, that's good information to know. There's lots of questions we could have regarding risk, but remember that these numbers that we just found out are good only for today. What will it look like tomorrow? Well, again, another good question, and we can figure that out by coming down here to our calendar. I'm going to click on this plus sign that's going to advance the date 1 day. Not much of a change, but watch what happens if I continue to click. Watch this purple line, and you can see it starting to move. And that tells you that you're going to get different answers, and in some cases, very different answers. Look at that gamma go. Remember, for an at-the-money option, gamma is going to go close to infinity right at expiration. So see, we were in small decimals, and look at this. Now we're at a maximum of getting close to 10. Down over here on the negative side, close to 10. But we're at very different stock prices. This is at about 156. This is at about 139. So you can see that the answers you get on 1 day are really only good for a very short window of time. And that's why this tab, this gamma curve, is so critically important to understand, because it shows not only where your maximum gammas are going to be, but also how quickly they're going to change and when they're going to change from positive to negative. So that's just a quick look at the gamma curve. It's one of the sub-tabs in your risk profile in thinkorswim. So I hope that helps you, because it's a really good thing to understand, especially for these volatile markets. Watch your gamma, and that way you won't have any unwanted surprises about your deltas. And for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.